What's up, guys? It's been a while. Maybe wondering where I've been. The crux of the matter is I needed to take a break. So sometimes you just have to do that for yourself. But that aside, I'm here now when it matters most. Things are not looking great. We have stabilized over the weekend, which is a good thing. So I want to get into the charts, have a look at what's going on, look a little bit macro, see if we can try and set ourselves up for what might potentially happen next week, and see what the charts are showing us. As you know, on this channel, we tend to ignore the news, the media, everything else that is out there, and we just trade what we see. So in this video, I'm not necessarily going to go through trade setups or what to trade this week. I'm just going to show you where everything is. The purpose of this video is to help you to make a decision about what to do with your net worth, because at the end of the day, we have banks collapsing, which might make you worry about keeping your money in a bank. We have USDC depegging, which might make you worry about keeping money in stable coins. We're in a bear market, so you may not also want to keep your money in volatile cryptocurrency assets. So what do we do? You know, I'm sure we have the option to shift to gold, but that's already pumped this week. So let's just go through and let's just this be the rational channel on the internet right now. And let's talk solutions that we can control, because we cannot control what is going to happen with the banks. There's no point sitting here wondering if what may be the only thing you can control is your personal net worth and diversifying that enough to stay safe. So let's have a look at the charts and see what's going on in general with Bitcoin. And as always, we'll take a look under the hood, find out where the liquidity is so that you can make an informed decision about what to do next. If that is the kind of content that you like, be sure to like and subscribe. Even though I have had a fairly decent break from YouTube, I am planning on coming back very soon. Things are a little bit crazy right now, but once they settle down, I will be back on YouTube a little bit more often. For now, let's get into this video. Now, first of all, I'm actually starting on the weekly on Bitcoin. So we're having a very, very large look at Bitcoin. And what we can see when we zoom out to the weekly is if we follow the model that we do follow on this channel, we usually look for an M formation, 3 hits to the low or 3 drops. Then we look for a W formation, 3 rises. So when we start on the weekly time frame, we can see that there was a final damage M formation here at the peak of the bear market. It's very clear that this here was our first drop. This here is a retrace, and this here was the second drop. So we have identified that on this channel a really long time ago, and we have been waiting to see if there is going to be a final damage third drop coming. Now, when price did retrace and have this little rally up to 25K recently, we still rejected the 50 EMA on the weekly time frame. So and it didn't really create a peak formation or a W pattern or anything like that really on the weekly. So it is possible that this is, you know, what they say, a bullish rally in a bear market, and that we do still have more downside to come. Now, not to worry you, but a level 3 drop, it doesn't necessarily have to break to new lows. So we have to keep that in mind. It can just revisit previous lows, and it can just consolidate. So I don't freak out too much, but just know where we are in the higher time frame model. When we have a look at the daily time frame and we zoom in on the recent run that we did just have, what it does look like potentially here, which was a warning that I kind of put out in the Discord a couple of weeks ago, we had a W formation here, and it does look like this was all 3 rises in one. Now, it's important to know that rises don't have to consolidate or retrace in between levels. So it is possible. I mean, this is definitely a consolidation here, which means that through here could potentially have been the third rise, which would mean that these 2 levels here would have been the first and second rise. So it is possible we had a W formation, we broke the 50 EMA. It's possible that this big run here was level 1 and 2 together into consolidation, which we call the board meeting over here at TTC, final level 3, and then this here is the final damage M formation. I have a habit of making up my own language. If it's your first time here, just know that I make up my own language. And these aren't things that you could Google because they don't actually exist in anywhere other than my mind. So a final damage M formation is when the second peak is actually higher than the first peak. The reason that they do that is because when they create the first peak, the idea is to trap people into long positions at the top. They do it after a big run up like this here. People think that this is never going to end. You may have seen on social media when this was running up like this, a lot of people were calling 30, 32K, etc. And so they run it up, they get you to panic into long positions way too late at the top, and then they pull price away. Once they pull price away, that's where the trap is happening, but it's also where they reassess to see if they have trapped enough people before they change the trend. If at that point in time they decide that they haven't, that's when they come back and take price higher. The point of taking price higher than the first peak is because it will stop out or liquidate the people who were actually right, who actually shorted here the first time and had their stop losses just above this level or their liquidation points. Price comes up. Not only does it take out their stops, but it also encourages other amateur traders to go long as well. Now they've trapped more people and collected more contracts, and that's when they're able to shift away. So that's why I call it a final damage M or W, because it issues the final damage to the traders before they shift price the other way. And now at this point in time, we have this retrace. So you can see here I have this area of interest identified. I might actually just change it to this candle exact here. So that's taking us between 17.9 to 19,150, that kind of range. And the reason for that is because that's the next vector on the daily time frame. So this green one here that you can see has already been reclaimed with these red candles right here. And this one is white, so it doesn't count. And this one here is the next green one, meaning it's the next high volume one. So that's the area of interest that we need to keep an eye on. And now we kind of want to match that up with the liquidity that we can see online and see if, we can get any confluence there. So before I go to liquidity, let's go to the heat maps and see what's going on here. A couple of interesting things to note. So we do have some pretty high levels below price. We have this level here. This high level below price is where people are willing to buy Bitcoin. So we have 20,050 is one level. And then further down, we have 19,900 and 19,650. So I'm just going to mark all of those in. Now, the problem we have with this range right now is that it is a weekend as I film this. So, the institutions aren't actually trading right now. And it is definitely something that we need to reassess when the market's open, because the levels could come very, very different once the market opens. But I really want to see if there's anything below these prices. And I don't really expect there to be, simply because of the timing of the weekend. What I would watch if you were a heat map trader is see if some orders start to open up around these lower levels that are within that box zone between the 17.9 to the 19,150. See if they open up when the new week actually starts. But for now, we've got between 19,650 to $20,050 is where longs are willing to buy. However, because that only buys into the previous week on the daily, it's kind of just telling me that that's where they want to hold the range for now. It's not actually a decision to buy. And I'm going to get more clearer on that if I can see the same thing happening at the top of price. So up here, I can see 20,600 and 20,800. So now if we go back to the chart, now you can see if I stretch that out, you can see these pink lines here are where all of those long and short orders are. And you can see that they're really just above this candle and below this candle into the wicks. They're really just holding price in a range for potentially the rest of the weekend. We'll go down to a smaller time frame to have a look at that as well. And what that essentially means is all part of the weekend trap. So let's have a look at the 1 hour time frame. Now, when you're having a look at a weekend trap, we want to take the price from the end of US on Friday, which was the end of these gray dots here. By the way, if you're looking to have the market sessions on your chart, go to the indicators and search market session times by trade, travel, chill. And then you can add these session times to your chart so you always know which session we're in, when it starts, when it ends, etc. So from when US closed on the weekend, just before the weekend, that's where you want to mark the highest point that price went during the week, not including the wicks, and also the lowest point, not during the week, during the weekend, and then also the lowest point, and that becomes your weekend trap. The reason that I don't include the wick is because I want to see where price is wicked either side of that box, because that gives me a hint where the trap is actually happening. Now, usually early on, you get wicks one way. So we can see early on in the weekend box, the wicks are to the upside. And then towards the end of the weekend, if the wicks are to the downside, those wicks, it hasn't happened yet because we're not enough into the end of the weekend. But if we start to get price come back down and wick into this area, those wicks will be stopping out these longs, and that will become part of the weekend trap. So ideally what you want to do is when the markets do open next week, you want to extend this box to wherever the weekend ended and just have a look which way the wicks went. They're likely to come into some of these buy and sell zones. See how the buy and sell zones are literally right above the candle closes of the weekend trap. It's almost too obvious, really. So whilst price is in between this box, I wouldn't make any decisions. Yes, does this look like a W formation? You could say that, but look how weak the price is afterwards. And in addition to that, we don't have a stopping volume candle that created the first peak. So I would be very, very cautious about this price action, because at the same time, could you also say that what is potentially forming right now is an M formation? You could. So there's arguments for a W and there's arguments for an M, which is why I wouldn't make any decisions right now as far as trading decisions. I would just wait and see if price comes into any of these zones that I've just told you about, and make your decision from there based on which way the wicks kind of shoot out once it hits that zone. Now let's have a look at the heat maps for Bitcoin, and we've got currently a delta of 20 billion to the shorts, which we know usually at around that kind of a level is when we do see a bit of a turnaround. However, if we have a turnaround, you've got to remember that there's false move week beginning. That can happen anytime from tonight into tomorrow. It can even be tomorrow's entire day trend. So if we do get a move to the upside, I would really, really caution you to not believe that this downtrend is over just yet. And any move to the upside is just a liquidity grab, because look how much liquidity is up here. Grab that, and then for a further move to the downside. But it really does depend on what comes out. We're in a weekend. There are no solutions to the problem. So really things can go either way. But for now, we just need to know where the liquidity is, so that once the market does start to move tomorrow, we can then get a little bit of a heads up once we see it, because we know in advance what is available for the market makers. So below price, the biggest area of liquidity I can see is at around 19,400, which would be lower than the weekend box that we just drew out. We've got some other areas here at about 19,800-ish. That would be more in line with the box that we just drew out. But above price, we've got a lot of shorts that have liquidation levels between about 21,260 to about 21,900. We've also got this other smaller one, not as big, at 20,800, which is where we currently have the heat map orders. But like I said, I believe the heat map orders are currently just holding price in the range. Definitely wait till the market opens and see if more levels open up at other prices, because that's going to give you a better hint than what we can get. We just simply can't really get it on a weekend. Now let's have a look at the heat maps and what has opened up over the last 12 hours where the major liquidity is. We do have at 20,100 a pretty big level down there. And then the next biggest level is still down at that 16,400 level, but it would have to eat through all of this first. So we won't worry about that too much for now. Really all we're looking for today is what's the short-term potential move going to be tomorrow, and based on that, what should we do with our capital right now? So at the end of the day, banks aren't particularly safe, crypto's not particularly safe, stable coins aren't particularly safe. The moral of the story is just don't have all your eggs in one basket. Be diversified, and diversified doesn't mean just have some crypto, have some cash. Wherever all of that is, have that diversified across different places and different coins and even currencies if you can. Don't have just one bank account. You don't know what may collapse next. Don't have just one crypto wallet. Don't have your stuff on exchanges. We know all of this stuff, right? So that's what I would be planning for. That is what you can control right now, is where your net worth is right now, and make sure it's safe while all of this blows over. But as far as actual trades, I would be very, very careful of trading right now. Wait until the market opens, wait till it has a reaction, and just know that there is potential for a false move at the week beginning, with the real trend to start around the Tuesday sessions. So you might be better off just letting that go, let it happen, and then reassess after Monday has passed and we know which direction the market maker wants to send the price in. Now, my initial target was at 20,800, then it was 19,600, and then it was 18,800. So we've hit two of those targets already. In the Discord, we were short on this from the 15th of February, meaning we were short from 25k, and we are still holding on to our shorts. So I'm waiting to see what the market opens, see if it will give me that final target at around the 18.8. If it does, and the signal, and I get my stopping volume candle there and it gives me the right signals that price is going to turn around, then I'll bag flip at that point. But for now, really just need to see what happens out of the weekend trap box. Once the market's open, keep an eye on the levels that I've mentioned in this video and look for wicks, because the wicks will give you the idea of which way the price is going to turn next. Hope you enjoyed this video. Sorry it's been so long. I'm just trying to get the good setup. I'm trying to live life on the road. I don't want to live in one place, and I have to figure out a setup that I can travel with. So bear with me. I've also been super busy teaching the course from scratch. We started that a couple of weeks ago. It's not too late if you want to learn this method from scratch. That is what we're doing currently. All of our sessions are live currently twice a week, and everything is recorded. So even if you can't make the live sessions, you can watch the content after and learn this entire method with examples, everything like that, the entire thing broken down. So you can learn this method for yourself. If you're interested, just head to my website. The link is in the description below. And don't forget, if you are looking for an exchange to trade on, which you may be right now, OKX is my preferred exchange. Just go to their website. They do have the audits on there. Make sure that you feel comfortable. At the end of the day, anyone can recommend an exchange, but you have to feel comfortable to keep your crypto on there for the purposes of trading. I never recommend storing crypto on exchanges, but you need to have a little capital in order to trade with. So check it out if you like it. There is a link in the description down below for you to get 50% discount off your trading fees ongoing, and many, many sign-up bonuses as well. So check that out. Be safe. Really consider, whilst prices being stable right now, please take a look at your portfolio and decide, if things were to drop a hell of a lot more than what they are right now, am I going to be okay? If the answer is no, then consider selling your crypto or selling whatever it is that you have, moving it somewhere else, and just wait it out. At the end of the day, once this passes, you can always buy back in. Second of all, protect yourself by diversifying. Don't have all your money in one bank. Don't have all your crypto in one wallet address. Move things around, be diversified, because if one thing goes down, at least you've got a pool of money or a pool of crypto somewhere else, and life can go on. That is the best way to handle what is going on right now. Have an amazing week. Consider joining the community, because we have updates every day, and unfortunately a little too busy and a little bit too hectic to be able to do social media all that often right now. But if you enjoyed this, if you found it educational, if you found it helpful, please consider giving me a thumbs up. Leave me a comment down below if you have any questions, and consider subscribing if you're not already subscribed. See you on the next one.